Thanks, everyone, again. I'll actually speak now and do my job, which is kind of analyze markets, analyze data. And I so appreciate the gentleman's question about, do we have a system in place that brings all these different science-based solutions together, weather and sustainability. And, that's always kind of been my interest. I grew up on a farm a long time ago and been in agriculture all my life, and I've always been really key on using data and analytics for decision making. So, what I want to share with you today is really kind of a microcosm, small project, because the Mississippi River has gotten a lot of attention, with what's going on with, the severe low water levels. And so in much of my career, I've spent a lot of my time looking at spatial prices, grain prices all over the country. And so for those of you that are Epion farmers and you get onto the Epion Profit Center, that was something I started in the late 90s and handed over the reins of that in 2017 when I joined Epion to help understand for you as individuals where to go with your grain, but then also me as a scientist to kind of understand what are these spatial distributional effects. And so, with the Mississippi River, that's such a lifeblood of exports, and we all know that and we see it. And so, what happened this fall is one event, but we've also had other events that have disrupted our trade along that vital pipeline of water. And so I want to spend some time today just kind of talking about what are the effects on farmers. And I'm going to show you some different events that have transpired over the last 20 years. And I'm going to focus on prices. I'm an economist and not a scientist like my colleagues over here. So I like to talk about markets and prices. And I'm going to show you kind of the impacts on prices, not only in the US, but also as we get beyond our borders and into international markets, how that's impacted us. So just to motivate, I didn't really know this too well, but 31 US states plus 2 Canadian provinces drain through the Mississippi River. Those of you who know me, I'm from Montana, and we actually happen to live at the headwaters of the Missouri River, way up in the upper left, so we're right at the start of the Missouri River. So I'll tell you, we got a lot of snow we'll be sending down this way in the next couple of weeks and months. But all that drainage is what ends up in the Mississippi River. And so it's not just one place of the country that causes a drought or causes problems on the Mississippi River. It's a culmination of different events. In kind of economic terms, corn exports, about 61% of our U.S. corn exports go along the Mississippi, is similar, but slightly smaller amount of soy, and wheat is much less so. But so it really, really matters for corn, for exports, and secondary for beans. And I'm going to focus mostly on the corn impacts in my small little time I have today. Climate change, I'm not going to get into that because it's a complicated issue. I wish there was an easy thing to say. Climate change will do this to the Mississippi River. But as Michael eloquently said, climate change is a many-faceted effect. And that's especially true as we think about the Mississippi River because you have rising waters on the Gulf, you have a drier west, you have a wetter east, and all those factors kind of affect. So I don't think there's a strong conclusion that climate change will make the Mississippi River drier or wetter or whatever, but it's going to be volatile as we go forward. And so I think it's worth understanding what are the price impacts. And if you're along the river, and depending on where you are, in proximity to the river, you may see very different impacts as I talk about this. And so, what we have today and what we started in kind of the fall as a result of the Mississippi River was just kind of the culmination of a dry west. And again, I'm from Montana, so we had a very, very dry, one of the worst droughts since 1988 in 2021. And that drought has really kind of, as I kind of animate this through, you'll see how the drought has just persisted and spread as we've gone through the rest of the country. So, as we get into kind of the late fall, and October, November, there's hardly any part of that Mississippi watershed where we don't have impacts of drought. And they've been severe or real severe in some cases for quite some time. And so, that is kind of my non-science way of explaining why the water levels are what they are in the Mississippi River. And as we look at kind of water levels on the Mississippi River, this is a really, really long time series going back to '88. we can see kind of 4 major episodes where we've had water levels this low for this long. So the most recent event we're in lasted about 52 days. You'll remember the 2012 drought where we had about 100 days of water levels this low. And back in 99, which may not ring any bells for you, but in 99 we had a similar magnitude. That was actually the last time we've had the La Nina persist as long as we have had today. So it's kind of similar in terms of INSO effects that Michael was talking about. So I want to just kind of quickly, in the short amount of time I have, just kind of talk about what are the price impacts. Most of you probably understand basis, or the difference between cash and futures, that basis that is being paid to farmers. What's interesting about all those 4 episodes I just showed you is that they all correspond to around the same time of year, right around fall and harvest, which makes it exceptionally challenging because that's when most farmers are trying to move grain to markets. And so those disruptions, those 4 disruptions I showed you on the chart, also in conjunction with hurricanes that happened in 2005 and 2021, also happening at those same times of year. So it's kind of important because it's happening at times when farmers are really needing to move grain to markets and markets are getting disrupted. And so I want to just kind of walk through 3 of these events that have happened. First is Hurricane Katrina. You might remember that hit the Gulf of New Orleans, or hit New Orleans and the Gulf of Mexico there in 2005. And then just last year, on the anniversary of Hurricane Katrina, we had Hurricane Ida. You'll see the time periods of those events pretty much in the same time period. And then I'll look at 22 and the drought that started around September 19th. So to paint that story for you, go back with me, if you will, to 2005. Long time ago, 17 years ago. This is pre-ethanol. This is like before the ethanol industry was really booming and growing. So it was a long time ago. Hurricane Katrina happens, and you can see the red areas where the basis impact is most severe. And on the right, you have kind of the the barge rate effects, but on the left, you have the maps and the basis impacts. And basically what I want to do is just run that again so you can see it. But you can see, obviously, the Mississippi Delta greatly impacted, all the way up into Minnesota, Iowa as well, with pretty intense red zones going along there. Now, that's 2005, okay? Long time ago, 17 years ago. Let's talk about the most recent hurricane. Again, comes to New Orleans, August 28th, disrupts a lot of things going on the river, shuts down a lot of barge traffic. And let's see what happens in 2021, a full 17 years later, during the same time period. And I want you to watch this and see. You still see big impacts in the south, but look up there. Look up into Iowa, into Minnesota. You see specks, small, minuscule impacts. My hypothesis, and scientists like Laura and other people that publish in academic journals would maybe question my ability to test this, but my hypothesis is that ethanol between 2005 and 2021 has changed that market dramatically. There's all these new ethanol plants in Iowa and Minnesota that is sucking up any sort of excess demand. So you're not seeing those big negative basis impacts in 2021 like you did in 2005. All right. Now, the drought. Current day, today, starting in September, we're going to see much bigger impacts. The impacts are magnitudes of order bigger, but you're also going to see similar types of limited effects west of the Mississippi. I mean, there's a little bit there. So here we're in week 5. We're seeing some impacts. But keep in mind, barge rates are $2 a bushel more than normal at this time of year. And most of the impact is kind of, again, in that Mississippi Delta south and even into the Ohio River. So even though, Ohio River people weren't necessarily in the cornerstone of the drought, they definitely felt the effects of it. And we see that effect really continue to persist. So when you kind of look at 22's impacts, the big states that saw 50 to 70 cent losses on corn basis in that time period, the Mississippi Delta, Tennessee, Mississippi, Arkansas, and you get smaller and smaller impacts as you kind of get away from that. But even up into Ohio and Kentucky, those markets are not they don't have as many options like, say, an Iowa or Minnesota does. But you do see just kind of modest impacts even stretching into, say, the Dakotas. But those are very, very muted, if you will. So overall, my takeaway on this is that you see a very different impact depending on where you are. Farmers kind of south of St. Louis, I'm going to say those are really in the strike zone and kind of most at risk from any sort of disruptions on the Mississippi River. Now, I want to pivot really quickly and talk about international effects. Those of you that are market watchers, you're probably seeing the really dismal corn export sales that are going on now. It's just really, really bad. And I'll talk about that in tomorrow's session in the Global Grains panel. But I want to share with you kind of what U.S. values internationally are versus the major competitor that we have today, which is Brazil. And this chart's a little busy, so I want to spend a few moments just to talk about it and dissect it. What I'm doing is looking at U.S. export prices and Brazil export prices for corn at their export terminals. And I'm doing it not only across time, but across delivery months. So you'll see a 0, a 1, 2, 3, 4. That's signifying for spot delivery is a 0, 1 month ahead is a 1, 2 months ahead is 2. And what you have is a yellow line, which is the average over the last 5 years between the U.S. and Brazil. Normally, we're 20 to 30 cents up or down from Brazil at this time of year. And the yellow line is kind of representing the average. And then the green bars are where we were this year, going back to that early or mid-September time period. Now, look at the spot price in the very upper left. That's the spot price. If someone actually wanted to come in and buy a spot load shipment of corn, our corn price got as much as $1.50 a bushel more than Brazil. Way out of whack. All right. And you can see, obviously, the effects for a month ahead or 2 months ahead or 3 months ahead or 4 months ahead are getting smaller, but they're still well above normal. So what that tells me is that even though this is maybe a 1 or 2 month event, it's probably going to have prolonged impacts on our sales because foreign buyers who are looking to buy corn, even today, are still looking at this constellation and going, U.S. is too expensive because of some of these issues. So I didn't trace through and look at actual physical exports. I'll do some of that in tomorrow's session if you come join me. But you can definitely see how Brazil is benefiting and the U.S. is really struggling because our price is uncompetitive. So with that, asymmetric impacts, that really just is a fancy way of saying not every farmer is affected the same. And as I alluded to, if you're in that kind of south of St. Louis area, I think that's where you see the most severe impacts. And I think, as we kind of look at the bottom key takeaway here, I think, the need for action is, and this is an economic decision, but, having more on-farm storage may be something you want to consider. We've had, in the last 20-some years, we've had 3 major events that you can point to where you've seen pretty sizable basis effects during that harvest season. So if you're not able to store off the combine and you're having to just deliver it to the elevator, you may struggle with kind of getting the best price. So on-farm storage might be a way to kind of help you get out of that temporary 1 or 2 or 3 month event and get to a better price. So with that, I will stop, and so appreciate the time, and I'll be around for the question session afterwards.